All right, welcome everyone. Welcome to the Hurley Investments Market View Commentary for Tuesday the 20th. We protect as often as possible when earnings, technical crossovers, or market trends dictate. Which also means, and this is a key point that I should bring about for you guys. This also means that sometimes we have protection on when we don't need it the next day. So someone said, hey, you stopped protecting Meta. We had Meta bouncing between 460, 490. We had a good one at 490. We had not such a good one at 470 on puts that were making us money. But sometimes we're going to lose a little bit to protect some profits. And this one we have 400 shares. We are looking to protect $76,000 in this particular account. Well, Kevin, what does this 500 call mean? And this is kind of fun to talk about because for Meta, we initiated a full collar trade, which is equal to the long put and this position a short call. Long put, we have the right to sell a stock at a certain price for a certain period of time. Short call, the obligation to sell a stock at a certain price for a certain period of time. Now it's kind of neat because an obligation is awesome. Obligation to sell equals someone pays us or a credit in the account. In this position, when Meta was closer to 460 and just had its earnings, we thought, you know what, we sell it at 50 bucks, that's $40 higher. We'll take in a $9.80 credit. It's like we sold our stock at $509.08. When they have a cost basis of $281 and the real cost basis is closer to $140, we're sitting pretty. We're sitting real pretty. And for that reason, we thought, why don't we put it at a round number, 500, that Meta probably won't get up to and get over after its big move from 380 up to 450. I think it was a $70 move. We'll put it out to just before the earnings because Meta should report at the end of April. And we'll see what happens. If it keeps going higher and gets called away, we're going to book a huge profit. If it doesn't, we can use that 980 to protect us almost $10 to the downside. If it goes up but not quite up to 500, that credit gets bigger. And on days like today, this covered call, when the stock lost $1.57, it made $1.25. Stock today, we lost $6.28. We made up $500 of it on the way down. We can not only protect your stock with a long put, we can protect your stock with a short call. There are two different ways to protect your stock. And today we chose to use that covered call because we're not sure of the range of Meta. 460 is our line in the sand. But if you look at a chart on Meta, 460 is a tough line in the sand to stick by. It might not even be the best line in the sand, because that line in the sand keeps moving. Meta's building a base right now. If you were to look at Meta, what is the bottom range of their line in the sand? Holding the gap, the split, 455. I love it. You all in a certain way are correct. The gap could be right here, which might have been 413 where Jim was talking about. The lower end could be 455, even though it maybe looks like it got down to 450 here. Holding the gap, which might be closer to here where it went up, which is 460. There's a lot of uncertainty. We don't know where it is. In building a base, the stock doesn't know where it is. There it is, a little bit harder. 63, 55, 465, maybe it's 406. It's tough to read. Hey, maybe it's 417 on the R1. Maybe it's 445 on the R2. The funny thing is, we came up with 4 different answers. And to be 100% honest, we're not exactly sure either. We were taking the 460 where it gapped up to. That was the other number that we were using. Hence, protection came on. Hence, protection came on, which cost us money the next day. And you'll notice a couple of these days it came off again pretty quickly. But we're getting an idea, 485, 488, 490, 485. We're going to be looking to put more protection on to protect the profits that are in there. We love this look. This is what building a base looks like. It's finding a level to make its next jump up. When might it make the next jump up? When might Meta make that next jump higher? Think it'll do it at Christmas? That's not fundamentally sound. You'll think we'll do it for the tax selling that happens end of March, first week of April? That's probably not technically fundamentally sound either, right? When do you think we might see another jump higher? Someone typed in summer. That is mostly true. There we go. Bingo, Jim. Great answer. Next earnings. Russ, you nailed it. Mary, awesome. It needs the catalyst. It needs to justify its numbers. It'll probably melt up to 485, 488, maybe 490. But the catalyst is probably earnings, which is why we choose to get paid for some protection. And we're trying to use that covered call or short call as a way to protect that stock on days like today. Awesome understanding of what's happening. So yes, for those that asked me, that's how we're trying to protect above the 460 range with a covered call.